This ain't the summer of love, little Blue Oyster Cult right there. Ain't summer of love. Man, it is beautiful outside because it's snowing. And this may not be the summer of love if we don't get more of this snow. It might be really bad here, but I'm sitting here with Joe, co-host. How's it going, Joe?
Colorado might be the only state in this country where people love to see snow.
Yeah, oh yeah.
I'm not from here, but I'm loving to see it because I'm a big hiker. And I don't want to be breathing wildfire smoke.
Exactly. Yep.
In the summertime. So this is a gorgeous, gorgeous thing. I mean, we probably had 5-6 inches come down right now, but up in the mountains, it's probably, 2-3 feet.
Hopefully a lot more. Exactly. No, we definitely need a lot more. And hopefully March and April definitely brings us that. For all the people listening on K4CO Radio or the K4CO Radio mobile apps or one of the many internet radio directories we're on, do you know that you can switch to the K4CO Radio social media platforms? Facebook, LinkedIn, YouTube, Instagram, all that fun stuff. And we're even adding more. Did you know that, Joe?
You can add?
We're adding TikTok to
you
this.
Can add.
I can add. I mean, subtract,
That's
not
not
really.
what Sarah says.
Oh, she's wrong. She's wrong. But she does
Wait
correct me a lot.
This guy is telling his girlfriend that she's wrong, ladies and gentlemen. Have you ever heard a brave man say that? Or
I'm
no?
very brave. I'm a very brave man.
You are. You have a great smile. That's probably what it is.
That is it.
And you sang to her. That's how he got her, Diane.
Yeah.
He sang to her.
Exactly.
Wow. Mm-hmm. That's impressive.
He won't sing to me.
No.
Which is totally okay. You don't have to.
Yeah, I won't sing to you. Sorry. That's reserved for just very, very few people, especially Sarah.
Especially Sarah.
That's right.
Sarah, I'm going to sing to you too.
Oh, all right. Well no, Joe. All the way
There's
from
one.
across the office.
There's
No,
one.
Joe. Yeah, Joe kind of says a lot of things that require a no, Joe, every once in a while. So even if you want to comment, throw a comment in when you hear it. Just say no, Joe.
Yes, absolutely.
Not going to happen. But if you do have any questions or anything like that, always feel free to throw a comment in there, and our producer Sabino will alert us to those, and maybe you get them answered here on this interview. We have a great interview. Joe,
Yes.
who do we have?
We have Diane Pepe. Am I pronouncing Pepe correctly? Or is it
Yes.
Pepe?
Pepe.
And so you and I talked about a month ago. We did a one-to-one.
Yes.
And I'm just going to say this is probably going to be the most interesting interview I've ever done because we're going to talk about credit card debt, first-time home buyers, like a million topics. And really, she could do 5-6 hours on everything that she knows. But it's going to be so interesting because 99% of the people in this country are affected by debt in some way, shape, or form.
True.
But that same 99%, I bet all of them do not really understand credit card debt and all the debt and the one font words in a contract they might sign for home debt, reverse mortgage. I know she knows what she's talking about because whenever I have an interview, I always ask the owner, what are 1-2 of the myths about your industry? And there's always 1, 2, maybe 3, but that's usually when they stop. Mm-hmm. She sent us a list with 15 myths.
A lot of myths that we're going to go over.
So
Yep.
if we get through all these today, you and I are really good at what we do. I don't think we can because I think there's just so much for her to talk about.
There is. I mean, especially with someone with the experience that she has. I mean, you can go to Diane Pepe. It's Diane.Pepe@homeloan.com. That's the email right there. 303-249-0023. And she's got an office here at 6860 South Yosemite Court, right here in Centennial. So very close by. Diane, thank you very much for coming in.
Thank you.
I really
Absolutely.
appreciate
Thank
it.
you so very much for inviting me.
Yeah.
Thank you, listeners, for listening.
I want to get started with some of these myths. How about that?
I got to say, I'm with you 100%. I got to say, please stay with us this whole 50 minutes. I promise you're going to learn something that you didn't know.
That's right.
This is such a mysterious topic. It really is.
It's not
For
really
you.
Not to her. I think most people, they just kind of, they don't understand the ins and outs. That's why they have a mortgage broker. That's why they have these people. I mean, have you seen a mortgage contract? I closed 20 years ago and it was almost the size of the Bible.
I'm sure.
Now it's an
I'm sure.
electronic Bible. 'Cause
Now
you
it's
can
an
do it-
electronic Bible.
It's a legal size paperwork Bible too.
Yes, exactly.
So we're like talking extra large, XXL.
And it's the tiny print, the font. Where
Yeah.
do you have magnifying glasses like that you provide people when
Just
they're
blow
doing
'em
this?
up on
Just blow them up
Yeah.
on the electronic sheet. All right,
All right,
sounds good.
But we're wasting time. Let's
All
go.
right. Well, I want to start with this. So, first of all, one of the biggest myths out there, number one here, is buyers must put down 20%. Yeah, is that a myth?
Absolutely.
Absolutely a myth.
You do not need 20%. In fact, most of the time, you can get away with using $1,000 of your own money. If you want to use like a down payment assistance program, a down payment of a minimum of 3% or 3.5% for an FHA or a conventional loan is absolutely adequate.
All right, wait a second. You just said you could buy a house by putting down $1,000.
Yes, you have to have $1,000 of earnest money. Sometimes they want 1%, but your out of pocket money could only be $1,000.
That's like an epic ski pass. It's $1,000
It is an
bucks.
epic speak, which are really gonna like those things are gonna sell like crazy and
Yeah.
come out the other day. But you said earnest money, so that leaves you out.
Exactly. No, I'm disqualified.
But so you do have a down payment, and that is a minimum of 3% or 3.5%. However, you can use not only your own money, but you can use a down payment assistance program to help you, because a lot of people don't have, $15,000 sitting around, right?
Sure.
But they can absolutely afford the monthly payment.
Mm-hmm.
So a way to get into a house is to kind of use one of those down payment assistance programs.
Right.
It's kind of like helping you in an A&E in a poker game
Right.
kind of thing.
And most people can because they're already forking out so much for rent
Right.
right now, but that's just throwing the money away. So, I mean, you sacrifice rent, might as well make a mortgage payment instead, and the house is yours.
Might as well.
Yeah.
I'm gonna segue a little bit. You're wearing the red shirt for the veterans, so the veterans even get they don't have to put any money down, right?
Right. They have 0% that they
There you go.
can put down. And their interest rates are typically a little bit better.
Mm-hmm.
And
As they should be.
as it should be, as well as the other perk of doing a veterans loan is that you do not have to have monthly mortgage insurance. Whereas if an FHA loan, or if you don't put down enough money, a conventional loan, you would also have to have monthly mortgage insurance. And
Is
a
that
veterans loan,
that's not
you don't.
PMI, is it? Is that PMI? So
PMI, yeah.
So, easy math. If somebody buys a $300,000 home, any idea what that PMI or mortgage interest would be?
It's a calculation based on a couple of different things.
Okay.
If it's for a conventional loan, then it's based off your credit score.
Okay.
And if it's an FHA loan, then that's 0.55%. So it's probably about $200 or so ish, not using calculator.
Okay. Here's my first stupid question. Veterans don't have to go to any place special. They can go anywhere they want and just say I'm a veteran and then get these perks, right?
Yes. What do you mean by anywhere
They don't.
special?
They don't have to go to a government office to get a.
No,
get a
they
mortgage.
just
They can just go to
call
any
me.
mortgage. Call you.
I mean, they do usually have to we do double check and vet that they are a veteran.
Sure.
And they have a benefit. But yes, they get that as a service because they were a veteran. But like their mortgage is not really from the Veterans Office. It is a federally backed loan that they have. It's federal. It's a guaranteed product.
Okay, here's kind of the tougher question. So the money that a veteran would save would be per monthly payment, $20 to $100 to maybe $500, depending on the size of the loan. I'm assuming.
Yeah, so it very much depend upon if how much monthly mortgage insurance that they would have, and did they put down any money.
Yep.
You don't have to put down any, but you can put down 5 or 10%, 20% as a veteran. It's not like there's not a maximum amount either.
Right.
Okay.
But you're not
All right.
required to have upfront mortgage insurance, or they do have the upfront mortgage insurance. They do not have monthly mortgage insurance.
And
for
mortgage
veterans.
insurance can definitely be a few $100s a month on that for like an FHA or anything like that.
For an FHA loan, yes, and for the upfront mortgage insurance or the monthly mortgage insurance for a conventional loan is based on your credit score, as well as some other factors.
Okay.
So, once upon a time, they were just as much as an FHA loan, hundreds of dollars. Now, I did a couple of them in this last week that were like less than $100 because the client's mortgage, their credit score was greater than 780, but they were
Right.
not putting down 20%. So, still benefiting them that have a higher score.
Yep.
But then they only had $50 as monthly mortgage insurance.
I'm glad you mentioned credit score too, because that's another one of the myths here. And I wanted to know if there's a difference between veterans and a normal population where only people with excellent credit can buy a home. I know that's false. I mean, but how false is that?
So remember that a credit score range is from 350 to 850.
350? There's a 350. Isn't it like the
You
SATs
should know
where
this.
you
That's
get
your
like
score.
500 just for your name? Like,
Yeah. I get 350 just for signing my name, right?
Yeah, 350 is signing your name. Making on-time payments is huge. So once you need to dabble in above 500 to get a mortgage, however, between 500 and 620, you are not going to be allowed to get down payment assistance.
500 and 620. So you need a higher credit score
higher
to
the
get
better.
down payment assistance?
Yes.
Okay.
Because they
gotcha.
need to
That's
see
huge.
how credit worthy you are.
Right.
Yep.
And so a lot of people use Credit Karma. And it's a free service. So I would say use cautionary tale when using Credit Karma because they do different calculations than a mortgage lender will. A mortgage lender is a 2-year look back at your overall history, where Credit Karma is sometimes more in a silo.
So it's not always that accurate.
It's I would say within 20 points.
Okay, that's not
So
too
it's
bad.
not
Okay.
so it's not too bad.
Gotcha.
But it gives you an idea as a place to start.
Is 650 or 700 or 750 kind of a magic line with credit in any way?
620 is a big magic number because that's the Colorado. There's 2 different down payment assistance programs, and 620 allows you to get in that door.
Gotcha.
So and the down payment assistance gives you 4%, which obviously 3.5% is the down payment requirement. So it covers the entire down payment.
Do you get more perks for being above 750, being above 800 with your credit score?
The last perk cut off is 780.
Okay.
780,
All right.
huh?
So shoot
That's
for
really good.
620 and then shoot for 780.
Yep.
Right,
So
somewhere
and then
there.
but 720 is also another hallmark. So from 620 to 720, you really should be in an FHA loan.
Okay.
And with a couple of caveats to that, of course, 720 and above, then you are more looking into the conventional loans perspective.
Gotcha. Another myth, actually, I'm going to throw out a little myth in here because I don't know the correct answer. So I know that.
I've heard that before, ladies and gentlemen.
I don't know a lot of correct things. I definitely don't. When you're paying on a mortgage, I mean, a credit score is what I've heard far more than just making a mortgage payment, because making a mortgage payment doesn't really help your credit all that much as opposed to credit cards, auto loans, stuff like that. Is that true?
Plus and minus,
Okay.
right? So I think people pay a lot more attention to their mortgage
Okay.
and making it on time,
Oh yeah, definitely.
right? Than a credit card.
I can be late on a credit card, I can be late on auto loan, but as long as I make my mortgage,
Right.
right.
So, however, if you are late on more than 2 mortgage lates, is what they call it, a mortgage late within
Right.
30 days. If you do too many of those in a 12-month period of time, you will not be eligible to a refinance or a purchase.
Ooh.
Gotcha. Ooh,
So,
that's
I mean,
I'm
right
sure
there.
nobody knows that one.
Yeah, that's huge.
And I guess I would say if you have a single late on a credit card, unfortunately, that can drop your score by like 50 to 75 points.
One single late on a credit card. Oh
Yes.
my goodness.
So-
Is that the way they do it, or is that like a could be thing? Like it could be
Oh, no.
25 to 75. Oh,
Well,
really?
I mean, like it really kind of depends on where your score started, right?
Yep.
I mean,
Right.
like how much is it affected?
Mm-hmm.
As opposed to, and I can't believe I'm saying this, but like if you have insufficient funds in your bank account for 5 days while you have no late payments
Mm-hmm.
on a credit card, is sadly slightly better because you're going to get dinged $6
Right.
for a bank.
Mm-hmm.
You're going to have a record late payment for your credit card for 2 years.
Wow. All right. that's a lot of credit.
Wow.
I think one of the
2
biggest,
years, really?
Yeah.
You missed one? I mean, for goodness sakes.
I think one of the
That's
biggest things
30,
is
30 days being late.
Okay, 30
Like,
days.
at
It's
least
not,
30 days
okay.
of late, not just 3
A
days
day, a
late.
couple, okay.
And outside of that, I mean, actually, this was one of the questions I wanted to ask you. Credit scores intimidate a lot of people. What practical steps can someone take in the next 6 months, 12 months to become more mortgage ready? Because I think a lot of people suddenly are just like, okay, I've been renting for a while. I'm going to buy a house now. And it's like, well, what should they be thinking about 6 months before, 12 months before to become mortgage ready?
Mortgage ready.
Yeah.
So I would say it's a large part of it is don't buy a new vehicle, and or used vehicle, right? Do not have a new car payment, because you have to remember car payments are also, which nobody knows, your interest rate of your car payment is also based on your credit score.
Yeah.
Right.
But they're always going to find you a way to give you a new car. But people don't care because now they have a new vehicle.
Right.
And so having it, don't buy one and your credit score is less than 600 because you're going to be paying like 18% interest on that car. And you can't refinance those easily, within at least a year of on-time payments. Then maybe they'll let you do it.
Okay.
But if your credit score is greater than 720, then your interest on a car is like 10% or lower, right? It's way lower.
Right.
So I would say if you're going to thinking about buying a house, do not also buy a car or truck on payments in the next 12 months.
If anything, you want to buy a car after the house? After the house.
After the house.
I've never heard that before in my life. I think we're up to like 3 things I've never heard of before in my life. I mean, go
we could
ahead,
spend
let it
all
fly.
day on what you
Let
don't
it
know.
fly. No,
Down the
Joe. We
So,
Oh, go for it.
did I answer the rest of the question?
You did.
So
yeah.
I would say that's 12 months. Don't buy a car. Credit cards specifically, an easy way to help improve your scores is to have your balance less than 50% of the credit limit.
Okay, gotcha. So even if you get, you haven't had a credit card, you decided to get one just to build some credit. Let's say you get $1,000 limit or something like that. You want it under $400 to be safe.
Under $500.
Under $500. Okay.
And ideally, unbeknownst to like the credit card companies are never going to tell you this, you can absolutely pay it off every single month because why give them your hard-earned money?
Yep.
And as opposed to having only paying $10 or whatever the bare minimum is to build your credit, you can spend that same amount of money every single month, pay it off every single month via auto pay, so you're not late,
Right.
and build way better credit, and then use your own money as opposed to giving them interest.
Here's something people don't know. And I did this like a month ago. I've done this a couple times in my life, but I've called the credit card company and said, "You got an interest rate deal?" Yes. I had, like about a month and a half ago, I had 2 credit cards. One credit card company said, "Yeah, we'll knock down your interest rate 2%. So it went from 16.99 down to 14.99. And the other one I called and they said, "No, we don't have anything going on right now." But if you don't ask, you don't get.
Right. Exactly.
And if you have late payments, then it can go up to 25%.
Or 29.99.
Yes.
Yeah. Is that after the 30 days too, or is that like a single, like 2 or 3 days late? They'll just
No.
They're looking
30
for
days
ways.
or longer. I mean, they'll just keep increasing it as you have more and more lates.
And I gotta tell you too, yeah, because I was in finance. I remember being on the phone with credit card companies, and I remember people sitting across from me, and they said, "My credit card company said to keep a little bit of a balance every month, and it helps my credit more." That is
they get
absolutely false.
They get a finance
Absolutely
charge
false.
on that.
They want the interest.
They want the interest.
Exactly. They want the
Keep your
interest. charges
balance
on it.
at 0.
Yes,
keep your-
pay it in full.
Pay
every
it
month.
off.
Yes.
Yes, exactly.
I mean, there's going to be months, maybe during Christmas, that you can't pay the entire thing off. But then in January, double down and pay at least half.
Exactly.
And in February, have it off, and you're back to March and then going to pay off the whole thing. Like, we get that there's going to be months where you can't pay the whole thing off, but never pay just the minimum, because sometimes now the minimums don't even cover the interest.
Exactly.
Let's
Yeah.
let's give it's up. Oh, it's not up there on the screen. So I'm just going to segue and say, hey, if you want to get a hold of Diane, have a good conversation, and learn 8, 9, 10 things, and probably a 20-minute conversation, because we've gone 20 minutes and I've already learned 5 things. But her phone number is 303-249-0023. Diane Pepe with Fairway Home Mortgage, 303-249-0023. Is there like a phrase with the 249 or 0023 to make it easy for people? Okay, I was asking.
No. That's not
Mine
what I
would
was
just be
given.
1-800-NO-JOE.
No joke.
You need to call and see if that's available.
Right.
there, Joe.
Exactly.
Let's continue with some of these myths because I kind of like these things.
Yes,
The one that you
absolutely.
sent in was 30-year fix is always the best options. Why do people think that? And why is that a myth?
So I think sometimes people think that 30 years is going to have the best rate.
Mm-hmm.
Right? And
Yep.
it is definitely the most comfortable rate, right?
Mm-hmm.
So it can go over 360 months, and people are like, oh my gosh. Well, sometimes you can actually have a better rate if you have a 15-year mortgage, although your payment is going to be higher.
Right.
But if you do a 30-year mortgage and you have some extra cash every once in a while, then you can absolutely put that towards principal,
Right. Right.
right?
Mm-hmm.
So, but other times, if you have a small balance or loan amount, then sometimes your payment can actually be very comfortable at doing a 15-year because your interest rate is also going to be better at a 15-year mortgage. Or if you've had a 30-year mortgage, especially in the last 2 years, because interest rates have been over 7. Now is a great time to refinance into a 20-year mortgage. And it's actually, you're going to be paying about the exact same amount of money, but save 10 years. You would have 10 years less of interest.
What? That's pretty good stuff. Because I was going to ask you about refinancing in general, but refinancing down to a shorter mortgage. Is there one or two or three things that are happening in people's lives where they should sit down and consider changing it from a 30 to a 20 to a 15? Or just like, hey,
Or
I
just
got
pay
extra
more
money.
principal.
Hey, I just got extra money.
Right.
I want to.
If you have a new job that is paying you more, right?
Yep.
So that could be one of them. If your house actually has more equity now, sometimes a good time to refinance. So think about not just, people tell me this frequently. It's like, oh, I have a home mortgage of 2.875 from 2020, right?
Yep.
So I'm never going to get out of that. Except in the last 4 years, they've racked up $50,000 worth of credit cards. So now their expenses is an extraordinary amount per month. You know, not only just their mortgage, but also their credit cards.
Right.
Okay.
So you can actually look at that and say, well, now that I have more equity in my house, you can actually consolidate and either redo the first and combine them together, or you can take out a second, sometimes even without an appraisal, and have that second be consolidated and have now a second lien, but it's going to be at 7% as opposed to 25% for credit cards.
And then you're saving thousands of dollars.
Thousands of dollars a month.
in
I
interest.
actually just did that for a client about 4 months ago.
Oh, I bet you
So-
got a high five on that one.
Oh yes, the relief on their face
Yeah.
because they had $80,000 worth of credit cards. So their outlay in just those credit cards was $2,400, and I got it down to I think $700 a month. And they can obviously pay more, right? But now it's going towards those principles, so they can actually see them lowering.
Right.
There are ways. I think
There are ways.
there are ways.
Yep.
And if you're even hesitating, it doesn't hurt to call Diane. Just to have a conversation.
Right.
And sometimes it doesn't work out yet. You know.
That's all right. You got a 6 month or a year window.
Right.
She'll-
And or
I
you
mean,
can plan. Right.
Yeah,
So-
exactly. You can help them with a plan.
Exactly. Yep.
Another myth right here: you're permanently locked out if you have had a bankruptcy or foreclosure. And I thought, if you have a bankruptcy or anything like that, you're pretty much stuck for 7 years or something like that.
Right. So 7 years is the myth. That's kind of what they're hoping. They're like, oh my gosh, 7 years is going by. I'm like, well, really? A lot of the time they can, depending on the loan product. So an FHA loan, 2 to 4 years.
Oh, 2 to 4. Oh, wow.
And it
Okay.
also depends on the type of bankruptcy you had.
Gotcha. Okay.
Whether it was a 7, 11, 13. That also plays a part of when your relief can come back into play.
You know your stuff.
I try.
You know your stuff, because when some people throw out, numbers like that, and we're not talking dollar numbers, we're talking a 7, 11, or a 13 bankruptcy, 99% of people in this country have no idea what that means. So give her a call. There's options out there for you.
almost always an option.
There's almost always an option.
It's really just talking to somebody like yourself to find out which option can go for it. So,
And I guess like part of the why is just helping people, right?
Yep.
And so I was a pharmacist for 25 years, which was also again about helping people. And so I basically hung up my pharmacy hat to help different type of people.
Right.
And it's still very, very rewarding, just in a different way. There was a guy who actually reached out to his financial planner and was now getting letters from the IRS because he had back taxes and was worried about losing his house. Thankfully, there was not yet a lien against his house, but fortunately, he had enough equity that we were able to refinance his house, pay off the IRS over $100,000, reconsolidate all of his credits, and have him have less expenses per month.
Oh wow!
Are there other professionals in the community that should call you, like financial advisors? Should they call you to partner up?
Absolutely. Financial
who else?
advisors, real estate agents, insurance agents, homeowners insurance agents. Sometimes they have people who are like maybe not in the right mortgage, or they've had several claims and they kind of know their story a little bit more. So all of those people would be great partners.
Diane, you were honestly a needle in a haystack. You really are. Like, just people don't know about you, and people need to know about you.
What are Colorado has over 98% of it is small business, which we absolutely love here.
There you go, Darbs.
If self-employed, you must own your business for 5 years. That is another myth that actually you put in there. Can you explain that just a little bit?
Sure.
Yeah.
So self-employed kind of depends on the business, but you really only need to have your business for at least 1 year.
Okay.
The bigger one is 2 years. And so having you have your business for 2 years, because you really need at least 1 year of tax returns.
Okay, 1 year of tax returns. Okay.
Preferably two. I mean, it's way better if you have two. There are niche products out there if you're between the 1 and 2 year mark. Mm-hmm. So having it be for that 2 year mark. But the other thing about self-employed, because everybody else, we get to go off of their absolute gross income. Mm-hmm. Right? W-2, hourly, salaried employees are their gross income. However, you're self-employed, it is actually your net. And people, because they write off so much business.
Well, exactly. I mean, that's
right.
As a small business owner, I mean, that's
you don't want to have to pay taxes.
A perk for it. Yeah.
Exactly.
Yeah.
So, however, your financial planner should really be talking to you and always asking, are you planning on refinancing or purchasing a home in the next 2 years?
Right.
Because then maybe you should not write off everything and have no income.
Yeah. Don't write off everything, Joe. Have a little bit of income.
I'm honest.
All right, there you go. Before we started this interview, we were kind of talking about some frauds. Joe, you mentioned the wonderful commercials about.
I thought he was going to say I'm a fraud. Like,
no,
I slipped by that one.
I'm nice.
Wait a minute.
You're not a fraud. You might be fraudulent, but you're not fraud. I mean, you're not all the way. But Joe, you mentioned on TV the. Protect your home because your title could easily be transferred to somebody else. And there's this huge scale. You watch those commercials, it's like you almost get afraid. Like, oh, crap, how big is this?
Well, they're designed to sell on fear.
Of course.
Self-fear.
Of course. How prevalent and how much did somebody really worry about their title being transferred outside of their name?
I would say it's relatively low. Mm-hmm. From the standpoint that they would have to be getting phone calls and have to sign something to move their title to something else.
Okay.
So if you're not expecting anything from your title company is never going to reach out to you and say, hey, there's extra documents that you need to sign.
Right.
However, the bigger fear of fraud is wire fraud, of your closing cost money to the title company when you're actually in the process of closing on your home. I mean, you're so excited. The title company should, as well as your lender, should always warn you that your title company is never going to send you an email. The title company, you will always pick up the phone and have a verbal conversation with somebody about wire instructions.
Okay, never sent via email.
No, the wire instructions should never be sent via email because people will then hack people's emails, the title company,
Right.
and have you send the money via wire to a fraudulent place
And so that's you're saying that's pretty much the number one fraud
by a lot.
that you should kind of be concerned about.
Personal experiences, I know a couple people who've had that happen to.
Oh wow. Okay. That right there, just knowing a few people, I mean, in your industry.
No Diane.
Clients.
Get to know
Clients.
Diane.
Yeah, exactly. And it just kind of goes to show, though. I mean, one of the main rules is emails. Don't ever, don't click anything in an email.
Yeah.
If you don't know who it is, don't open it. Don't click any links. Don't do anything. So that's good to know, because I thought with the TV, you would think it's just, oh my gosh, I'm going to wake up one day and my house is going to be in somebody else's name and I can be kicked out. So
So phishing scams are really big.
Yep.
And they try to, and now that AI is available, they're getting smarter and smarter to have, very identical logos
right.
to the title company and much more similar email addresses and things like that. So you have to just be very, very wary about emails from title companies in general.
Doesn't really hurt if you get an email that's from anything in the financial world. Just hold off on it. Don't answer it.
Yeah.
Call the company and verify.
Exactly.
Your contact, not the
Yes.
one that's on the
Yes.
email.
Mm-hmm.
Yeah.
I'm actually going to kind of miss it. Now with AI, it's starting to get smarter. I miss the old emails where it's like the spelling was wrong, the punctuation was wrong. It just looked like a kid did it. Like, we're not going to have those anymore. We're going to have actually professional looking ones.
I want to do a little segue too. I mean, we gave Diane's phone number, 303-249-0023. Are you also on Facebook? Are you on LinkedIn?
I am on LinkedIn,
Okay.
Diane Pepe. Facebook is Diane Barker Pepe.
Okay. And Pepe is Pepe on
Yes.
LinkedIn if you're looking for her. And if there's, quite a few Diane Pepes out there, just do Diane Pepe, Centennial or Denver or Fairway. Probably Fairway. Fairway would be the best way to do it, and you could find her on LinkedIn that way.
Mm-hmm. Yep. Let's go to a couple more of the myths.
Are you fascinated? I said at the very beginning this would be a fascinating Are you fascinated?
I kind of love it. I mean, because I bought a house 20 years ago, and I know so much has changed.
Yeah.
So I love learning more. I love knowledge anyway, but
wait, whoa.
It was a lot.
Wait a minute.
Yeah, I do.
That's another new thing I learned today.
I didn't
See,
say
all
what
the-
kind of knowledge. Okay. I like a lot of useless knowledge.
There we go. Now you and I are on the
sometimes
same
I throw
level.
in the
Like
useful
the
knowledge
useless
here.
stuff that is out there in this world.
Exactly.
I'm good at Trivial Pursuit. I just want you to know. Sound
Yeah,
like that.
yeah, even our producer Sabino's laughing at you.
I think Darby even laughed at that one.
I think so, too.
Right, Darbs? Okay.
Another myth. If you only have Social Security or pension, you cannot purchase a home.
Not at all.
Not at all. Okay.
So your Social Security is actually really easy because then I would only need your yearly, your annual for the next year. This is the amount that you're going to be getting.
And it's solid. And
It's solid.
Exactly.
So it's actually less documentation.
Right. It actually probably makes your job easier.
It's much simpler, actually.
Much simpler.
I like those that only have a pension. Sometimes a pension letter, we need to have a little bit explanation, can help call them.
Right.
So that's the great information about that is you can absolutely use, and we can what's called gross up if your pension is, or your disability and or your Social Security income, we can actually call what's called gross it up because of taxes not being taken out of it. So you can gross up that number.
That's usually what girls say to me when I ask them out on a date. No, Joe, I don't want to gross up.
Yeah, I know that. I
So
can imagine that.
on that note, for the Social Security and getting a home, people over 65 want to downsize. So this is great information for them. I'm sure that's going to be the biggest part of the population, that would buy into that, right?
Absolutely.
Want to downsize. Josh, you're
You want
72
upsize.
years old.
It's called right sizing now
Right.
because sometimes they want to have a ranch, right? Maybe
Right.
it is a little bit bigger,
Yes.
but they don't want
Yes.
stairs,
Right.
or they actually want to be closer to the grandkids. So they actually want to have an extra bedroom or two.
Right.
So it's actually just called right sizing.
Yeah.
I like it. If you have a rate below 4%, and that's unheard of these days, I mean, but there's no way to access equity of your home.
Not true at all, especially in Colorado, because we have great value in our homes here, and they do go up by probably about 4% a year. That you can access that equity by using a second lien. So you don't have to get rid of your first lien, and you can take money out either what's called a HELOC and or second lien, and be able to access that money, as opposed to having a bank loan, like a personal loan. You can use that HELOC, and then the interest is also tax deductible. So there's a couple of benefits from having that second lien. So that way you don't have to get rid of your first. We have actually a product that is 100% automated. The appraisal's automated, and they do double check everything, and you can get approved in about 5 minutes.
So they just do like a quick electronic appraisal when it comes to that. Okay.
Yeah.
Nice.
That's good stuff.
Very cool. Changing jobs means you can't qualify. Now, I do know that, a lot of times if you don't have a job for a little while, and then let's say you just got a job like 3 months ago, then you probably can't get a mortgage, correct?
No, that's not true either.
All right. See? You
I
can offer
know.
knowledge.
More stuff.
Your new nickname is Dispel, because that's all you're doing is dispelling like so many things.
So it kind of depends on the job that you now have.
Okay.
And have you been in it in the past? So let's just say you you got an offer letter, and it says on the offer letter you're guaranteed 40 hours a week, and this is going to be your pay, and you do in fact get a paycheck with 40 hours a week. I can actually just use that starting today.
Oh, wow.
We will need a couple paychecks along the way to prove that you are actually getting your 40 hours.
Right.
But having it be a W-2 hourly position of 40 hours a week is easy. The caveat is that sometimes certain jobs, like nurses, usually do 3/12s. So they're at 36 hours.
Mm-hmm.
Those you do need a little bit longer on the job than those offer letters. But truly 40-hour work week folks can get in within a matter of months.
As long as it's truly 40.
As it's truly 40.
So I want to ask you questions because it's been in the news. Like, young people are having trouble getting jobs. Is the bar for young people the same bar as somebody who's changing jobs in their 30s or 40s? Because this is probably the first full-time job for a young person, or is it a little different for a younger person?
So younger person, depending on like if they're in college.
Yep.
You don't really have to have a 2-year history. You just have to show transcripts that you are in college and or high school. I've had a couple of folks who are like 20 years old and went to high school and now have a part-time job, and then they went to full-time. Mm-hmm. That's okay, that you can prove that you were in high school and or college. So you don't have to have that 2-year history look back. Another one of those lovely rules that got changed is now I need more documentation that you've had a job for 2 years. But it could be a different job. It could be the same industry. The same industry is nice. I had somebody who was doing it more on a commission basis and is now doing the same plumbing job, but is now guaranteed 40 hours a work week. So now I can use, even though he's been there for a month.
Right. Wow. For everybody listening in on the audio side, of course, if you're watching on the K4CO social media platforms, all of Diane's information has been there. Email Diane Pepe, Pepe at home.com, 303-249-0023. We've been discussing some myths, actually quite a few myths of mortgages. Next one coming up here. Down payment covers all costs at closing. And I want you to kind of boil through, when somebody's saving up for a down payment for a house, let's say they know what the down payment is, what should they expect so it's not a surprise in addition to a down payment?
Great question. So one of the big things is that it's about $10,000 more at closing.
It's about $10,000 more at closing. That's a little bit of a jump.
It's a little bit of a jump, and here's why.
Okay.
So you have to remember now, at this point in time, since lots of rules have changed, that they require you to pay for an entire year's worth of insurance up front at closing.
Okay, I did not know that.
So a whole year's worth of insurance. Whether
Why
you-
is this?
So that way they guarantee that you have insurance
Okay, for at least the first year.
for the first year,
Okay.
because you're required to have insurance on a home,
Okay. Mhm.
as well as part of it is a large part of that $10,000 is setting up your escrow account.
Okay.
So not only are you paying for a whole year's worth of insurance, homeowners insurance, but you're also putting in a 2-month buffer,
Okay.
at least, as well as setting up for property taxes.
All
So depending on what time of year it is how much buffer you need in there to pay your property taxes. So right now we're in March. The next property taxes is due in May. So you're actually going to need to have a little bit bigger of a buffer based on those items. So you also have to have a lender fee. My lender fee is the standard of whether the house is worth $200,000 or $1 million.
Right.
My fee is the same,
Right. Mhm.
Do some lenders do it as a percentage of value?
1%.
Okay. All right.
So the other thing also is, as a title fees, there's also a couple $1,000s worth of title fees, because they are the ones actually going to guarantee that they are removing the seller's name off of title from the county and adding in your name, and they're vetting that there's no liens against your house from before. So there are some extra fees in there. And obviously it depends on how much taxes are. So it will vary from the $10,000. I'm just saying that that's kind of a ballpark figure.
Especially if you have a $400,000 house or you have a $1.2 million
Yes.
house, it's going to be very.
It's
okay.
going to vary, but it is definitely in addition to, although your earnest money will kind of decrease those closing costs. So there is, your earnest money is not going to some nefarious place into fantasy land in a wormhole. It is truly getting used to decrease closing costs at the end.
Gotcha. What you have a, I'm going to use it, a plethora of information.
I haven't heard that word since sophomore year of high school, so thank you.
Sophomore year high school.
Sophomore
Wow.
year
Is that
high
when
school.
Three Amigos came out? Sophomore year of your high school? I like
Probably.
What is a plethora, Joe?
Yeah.
Yeah. No, what attracted you specifically to Fairway Home Mortgage and their way of doing business? Because you're very knowledgeable. And so when it comes to the process of you working with people, what attracted you to Fairway and the process from start to finish?
What attracted me the most to Fairway was the way that their business model is set up. Is that even though we work for a large corporation that's nationwide, Fairway has been around for 30 years. So it's been through the 2008 debacle. It's been through 2020. There's lots of mortgage companies who have imploded since then in both of those instances. And it's been around.
Right.
Like, it's seen it all. Every Friday, actually at noon, the CEO is on a company-wide call. And he's like, well, this is what we've heard from the loan officers. We're going to make this happen. And we're going to have it happen by next week.
Quick to adjust, quick to make decisions.
Absolutely.
That
And
is, normally businesses are an aircraft carrier taking 3 miles to turn,
yes.
not a little rowboat that can turn in 20 feet. Like, sounds like he's a real decision maker. Like, we're going to do what's best.
Absolutely. As well as what's best for every client. I've had a couple of instances where there's been some miscommunication, sometimes even from the seller as opposed to the buyer, and things are not working out at the very last minute. There is actually an email that we can get on and or a phone call. He gives out his personal phone number, but there's an email that goes out, closing 911. He's usually the first person to respond to say, how can we help him make this close?
Wow.
Most large companies do not have a CEO that cares that much.
Yeah.
And
They're
so I
usually-
really like that philosophy. I've worked for corporate America.
As
and
we all have.
and it's just not the same feeling. So
No.
he will always help the client and do what's right for the client. They've set up several nonprofits. One of them is American Warrior Initiative, and they've given away about 490 service dogs to first responders and veterans nationwide. And they also have a nonprofit called Fairway Cares, and they basically sent 15,000 care packages in 11 years to anybody who needs one. A loss of a pet, you found out you have cancer, a loved one has cancer, they don't even have to be somebody that's ever done a loan through Fairway. Any type of trauma in your family or that you've seen. I had a cousin who was tragically killed, and so I was able to send her parents a care package, and they're like grieving care packages, or people that are going to be in the hospital for months because of some accidents. They send the families care packages.
Will they send me a care package because I have to work with that guy over there?
No one cares
No, Joe.
about your
No,
parents.
There you go, Diane. There we go. I opened the door and she walked in. God bless you. That's good stuff. Hey, I'm going to segue real quick again because we'll probably do this. It's 1:45 our time. So Diane Pepe, DIANE period PEPE at home.com. Phone number 303-249-0023. And if you are a financial advisor, real estate agent, insurance agent, name one or two other good power partners for you that should call you. Please call Diane because you're going to help. You're going to look like a star. Diane's going to make you look like a star.
No matter
Especially
what.
for a financial advisor. You always want to be that person that knows a person to help you be that go-to.
Especially because when you're
clients.
going through a home purchase mortgage, you want a picture of all the finances.
Absolutely.
Just to make sure that it's going to work out the best way possible.
Yeah.
Because a lot of times, like you said, people can roll in stuff and it'll either benefit them or it won't, and you'll tell them.
I would say another person would be a general contractor who,
I would not
if you're
guess
going to
that.
do large remodels, we also can do 203K renovation loans.
Okay.
There's actually conventional and or FHA loan, kind of depending on, are you putting in a pool or are you doing structural things to your house?
Most
So
people
you
don't
can
know this stuff.
actually then, like whatever the equity is of your house, we actually get a new appraisal with the new, I guess, layout of the house or the upgrades of the house.
Right.
And the appraisal is then based on that amount, and you can like borrow against the new amount. So having just general contractors, builders, we can do one-time permanent closings. As opposed to having a closing for just the build, and then another one, we can do what's called a one-time close with only 5% down. There's lots of caveats to that, again, but lots of niche products. So just lots of questions.
What
What'd you call that? A 203K or something like that?
203K renovation loan.
203K renovation loan.
And what about, is there anything special, just because I have no idea, homes that are being built? I mean, can you be approved and ready while they're actually just building the whole house?
Yes. So whether you own, so Fairway has a special product that you can either own the land, not own the land, or already have it under lease.
Okay.
And so, and then you have a contractor who's building the house for you. We can help you with that financing from the very beginning. And sometimes our model is a little bit more attractive to those contractors because we can give you a lot more upfront than like 20%. We can give you up to 40%. A lot of time for the contractor. So it's a little bit different fee schedule for the contractors. Also, if you are an actual builder, that you can do what's called a forward commitment. So that's how builders have super low interest rates, 4.99 even today, because they have basically spent money up front and with a lender, and we can help provide those programs as well.
Nice. This question's for Joe because he really doesn't make a lot of money because he works here at K4CO.
No, thank God I have 10, 20 other side hustles.
Yeah, exactly. Well, and especially, I mean, it's Colorado. Colorado's expensive. One of those places that's just really expensive. And then for first-time home buyers, I mean, a lot of times it can be very challenging, if not fearful on that. And I want to talk about down payment assistance. It's a hot topic for those who might qualify. I mean, who might qualify when it comes to that? And I'm sure a lot of it is talking to you for an hour just to see. But what should people know about down payment assistance programs?
The easiest way would be to have a credit score of 620. And if you're not there, again, you can call me and I'll help walk you through how to improve your credit score. One of the rumors is that you can't get it if you make too much money.
So that's a myth.
That's a myth. That if you make too much money, you can't have down payment assistance.
Oh, wow. All right.
might not be using the Colorado, which there's 2 or 3 of them now, but those now are like upwards of $215,000. But there's nationwide ones that don't have a limit.
Okay.
So you might have a little bit higher interest rate, but you don't have to have an income limit. Some of them are that, I'm trying to think, like there's lots of different, I guess, parts of the down payment assistance programs, but those are the biggest ones. Is again sharing a couple of pay stubs,
Right.
and let's do some calculations. You kind of need to know what your debt to income is. Again, don't have lots of extra outstanding debts to kind of prepare yourself. But again, I can absolutely help walk you through those things, especially because right now is a great time for tax returns, right?
Yep.
So everybody's getting their tax return money. Well, what should you? A lot of people like save it because they're going to save it for their down payment.
Right. Right.
It would actually be better for you to pay off the credit cards and use the down payment assistance money.
Another thing that people don't know. They probably never thought of it like that.
Right. Well, I think it's just the home mortgages are so intricate that even when you start to think that you might be buying a house, you need to speak with a professional.
Yeah.
Because you need to have that plan in place so that when it's time to buy it, it's very smooth.
Correct.
So it's a smooth process. So thank you. So we could talk here for another hour, but unfortunately
we totally
cannot.
could. You are extremely interesting. Your nickname is Dispel because you have dispelled literally 15 things. If you're out there and you just have a question, there's got to be an unknown. Give Diane a call. My mind is blown, honestly.
You need to fill your brain with a lot more information.
I do.
You need to talk with Diane a lot.
I'm gonna go home and read a book now.
Yeah, just a book.
Yeah, just a like a comic book, just to put
good.
some kind of information in there.
I love it.
Fill the dead space.
Yeah.
Well, for those of you that just kind of got in towards the end of this interview, do know it's going to be on the K4CO radio platforms for at least a month. Facebook, Instagram, LinkedIn, YouTube, all over the place. And even if you're thinking about buying a house or you know somebody who's thinking about buying a house, just kind of share this interview with them and make sure that you have a plan. That's the biggest thing, I think.
Yeah.
Because a lot of times you don't want to get into, oh, I'm going to buy a house. I'm really excited to buy a house. And then suddenly it's just like, okay, I can't, or there's all these obstacles because I didn't plan for this.
Well, the answer is you can. It might just take time.
You can.
But more importantly, you can. You just
Right.
have to talk to Diane.
There's very little that can disqualify somebody
Correct.
for buying a house these days. So thank you so much for coming on.
Thank
I
you.
really
Absolutely.
appreciate
It's
it.
been lovely to be here.
Yeah.
You were awesome. you were really good.
you blew his mind. So
Oh my God, there's probably like 90 other myths that we just don't have time to talk about.
Oh, exactly. No, I mean, that's why you do the research and you call and you reach out. So email again, Joe, you want to throw that out there?
I do. The email for Diane is diane.pepe@home.com. She's also on LinkedIn, Diane Pepe, Fairway, and you'll find her. And then the phone number is 303-249-0023. And forgive me, I want to say this again. If you're a general contractor, especially a financial advisor, a real estate agent, or insurance agent, give Diane a call and let her enlighten you and dispel some myths for you as well.
It's always nice to have those contacts.
Yep.
Exactly. Thank you very much for tuning in. Again, this interview is going to be on our social media platforms for at least a month. So if you want to rewind it, check it out, definitely do so. Stay tuned. We have an afternoon mix of music coming at you. 1/3 of the rotation all the time is going to be local Colorado musicians. And then mellow to metal. I mean, but the afternoon mix is always a little bit rocking, gotta say. A little bit more hard rock to spice up your afternoon. Then, of course, 7 p.m. every single day, 7 p.m. to 8 p.m., 1 solid hour of only Colorado musicians. And then, of course, only Colorado musicians Monday through Friday, and 9 p.m. to 10 p.m. We have Kind of Vague Radio, hosted by Andrew Talent and Rob Dixon. Kind of a deep dive into Colorado. So thanks again, Diane. Really appreciate it.
Thank you, listeners, for listening.
Thank you. Enjoy the snow out there, everybody. And yeah, hopefully we get a lot more
Yes.
snow. We definitely need it. And thanks for listening to K4CO Radio. Here's some more music right at you.